Hello and welcome to Rajya Sabha Television. You're watching The Big Picture with me, Frank Pereira. India's economy suffered its worst slump on record in April to June quarter, with the gross domestic product contracting by 23.9% as the coronavirus-related lockdowns weighed on the already declining consumer demand and investment. The GDP contraction in the world's fifth largest economy compared with 3.1% growth in the preceding January to March quarter and 5.2% expansion in the same period a year back, according to official data released on Monday. This is the sharpest contraction since quarterly figures started being published in 1996. The pandemic has caused historic GDP contractions in economies around the world. In this edition of The Big Picture, we will analyze the Q1 GDP figures. Joining me on the program today are Nitin Desai, former Chief Economic Advisor, the Government of India, Ajit Ranade, Chief Economist, Aditya Birla Group, and Abhinav Prakash, Assistant Professor, Delhi University. Thank you to all my guests for joining me on this edition of The Big Picture. All right, Ms. Desai, I'd like to start the program with you first. Let's understand and hear your thoughts really on the Q1 GDP figures, contraction by 23.9%. Your thoughts?
First thought is a word of respect for the National Statistical Office. A lot of people were saying that they will understate the thing and show about 15, 16, 17%. They didn't do that. They have also said in their statement that they may well revise the numbers when the actual data becomes available, because in a lot of things the data is just not available. Because, as I said, the statutory reporting was suspended. So they were just using various other things for this. So where do we stand on this? It's clearly quite severe, one of the largest in the world right now. I'd say that basically the problem arose because two key areas are showing a huge drop. One is construction, the other is services. Construction is a short drop of about 50%, services is about 47%. Now, these are the ones which are causing a lot of problems because that's where a great deal of employment is, that's where demand is generated. Where's the plus point? The plus point only plus point I really see right now is in agriculture. The agriculture performance, because Rabi was good, and I think it will be even better in Kharif, because the numbers suggest that 20% increase in the area in the acreage. What happened was there were a lot of these guys who went back to the village, and they started cultivating. I saw a beautiful report on this from somebody, how these people who went back, who were working in cities, had decided to do something on the little land that they had. So I think you'll probably find that the beginnings of the upswing will have to come from rural demand. But for that, the government must be prepared. Because if you're going to get a lot of agricultural output coming out and very little, no real demand growth in urban areas, they will have to make sure that the farmers are not distressed. This will involve many things. It may involve, for instance, opening up the exports and preparing for it from now. Don't wait for the Kharif harvest to come. Start working on how am I going to handle a bumper Kharif harvest when it starts coming out in October, November. And particularly what am I going to do in order to stimulate exports and so on? Because this is the best short-term option. The other things are going to take a lot of time. I don't think revival will take place till the next financial year. This financial year is going to be a dead loss anyhow. So let me stop here and listen to what Ajit and Nash have to say.
Okay. All right. So, Mr. Ranade, Mr. Desai has very beautifully elaborated to us what were the two main areas or problem areas, that is, of course, construction and services. He's also spoken to us about where we are going to see some kind of recovery, and that is from the rural sector or the rural economy. Now, if you look at the figures, the Q1 GDP figures, what do you believe led to the severe contraction in the economy? Was it on expected lines? That's another big question.
Yeah, first of all, you can look at GDP from two angles, as you know. You can look at it from the production side when you break it up into three sectors: agriculture, industry, and services. And Mr. Desai said in not just services, but actually industry also went down, and agriculture did well. But you can also look at GDP from the spending side. Who's spending how much? So the consumer, so consumption spending, investment spending, which is expansion of factories, new capacities, and government spending, and of course net exports, which is spending by foreigners. What probably needs to be mentioned is actually government spending went up during this quarter. So I think the government was trying to heroically, at least do something against the tide. But of course, it was, far too little, and just not. It was impossible to. The large fall in consumption spending was, I think, about 26 or 28%. Investment spending was down, by the way, almost 50%. So if you look at it from the spending side, by the way, even exports went down by 20%, and imports went down by 40%. So we have a very anomalous situation that we actually in this quarter we had a current account surplus for the first time after many years. But that's completely a misleading statistic, because it was down. The current account became surplus because imports were down much more. What was the reason? Obviously, it was because of the very harsh lockdown. If you look at the G20 countries, which are the 20 largest countries in the world, India's contraction in this quarter, April, May, June quarter, has been the highest in the world by far. There's been some controversy about comparability, and even after you do proper Q-on-Q comparison or Y-on-Y comparison, India is the worst contraction. So that's, I think, attributable primarily to the harsh lockdown, because we started prematurely and we had a harsh lockdown. But not to forget that the slowing down of GDP is a trend which we have seen for almost 3 years, I think now. So if you look at GDP slowdown, if you look at investment to GDP ratio, not just decline, but maybe stagnation. If you look at the export performance of the country, and if you look at the NPA ratios from banking, which were steadily rising. So this is not a trend, so we need to acknowledge that even prior to the COVID pandemic and the harsh lockdown, we were on a very weak wicket and continuously sliding. Perhaps that's another reason. So you asked me for the reasons. I think these are the two reasons. And of course, now we'll see what the response. We can talk about that, how to come out of this. But primarily, these are the two reasons, I think.
Okay, all right, absolutely. We will go into how we're going to respond to this. Where is the recovery going to come from, and what needs to be done? But before that, let's look at another aspect in all of this. Abhinav, Prakash, of course, both the gentlemen before you have spoken about why the contraction in growth, what has led to it. But let's also talk about another aspect. All of this has also led to many people losing their jobs. That is something that is that is a major issue. We've seen several social media campaigns being carried out by the youth and students talking about these jobs itself. How much of an impact is this going to have in the next quarter and probably in this financial year?
Yes, Frank, that's a very important point, because see, the main problem in India, if you see from the income side or the spending side, is of it's actually an income problem. So in India, you have lots of jobs available, but the problem is that you do not have good, well-paying and stable jobs which are available for the youth. And that is a structural problem which has been going on for years and years, which was present even before this lockdown, which was present even under the previous government. And we have not done really much about it. So we have seen that there have been massive job loss, because you see the major collapse in the GDP is coming from the industry. And especially the manufacturing, which is minus 39%, and the construction, which is minus 50%. And you have the most of the people of your labor force who are employed in these sectors. So of course, the job loss is massive. Even where there's no job loss, there have been salary cuts. Even in the government sector, you have the DA being frozen. So there's a massive decline in the purchasing power of the people. And that is, I think, is going to have a very strong impact as we go forward. Because so far, the government's response has been on the supply side, that doing these reforms in the agriculture, in the mining sector, which are fabulous, which are much needed. But what you need here is something to boost up the income of the people so that the consumption goes up. So the people, the businessmen are not going to avail of your easy loans if you do not see any demand in the economy and there is no profitability available for them. So the income side needs to be supported, and that can only be supported by creating well-paying jobs. How can the government do it? Nothing can be done in the short run, let's say in the few months. So it has to have a plan for the next 2-3 years. But one thing the government can do very easily, both the center and the state governments, is to start filling up all the vacancies in the government sector. And you have
enough vacancies to absorb a large number of people so that, there's some relief from this decline in the income. Historically in India, if you look at Frank, that the demand has come from two places. One is the public sector employees, because they have the more stable and relatively well-paying job. And it has come from the businesses who are taking credit and doing investment and all those kind of a thing. Both of them are down at this moment. Neither you have permanent jobs, now you have by permanent I mean long-term stable jobs, need not to be permanent in the traditional sense, but people's expectations should be more stable about their future income flow. Unless and until we fix that, I don't see the consumption demand reviving in the country, nor do the consumer confidence. So I think going forward, this should be an important aspect of the fiscal response by the government.
Okay. All right, Mr. Desai, I'd like to take 2 points forward with you, one being made by Mr. Ranade and the other by Abhinav Prakash, of course. Mr. Ranade spoke about comparisons. So let's, compare how India did really with similar sized economies from around the world and how that panned out. And the second one, of course, is the issue of public spending that Abhinav Prakash has raised. How much can the government really spend and how much of demand can it create at a time when the economy is in a slump?
Can I take the second question first?
Yes.
In many ways, this is a problem, that we really do not have the room for public sector spending because of what has been happening to the tax revenues, etc. The drop in GST and so on. Unlike 2008, where we had room for taking fiscal risks, this time we do not have as much room for taking fiscal risks. Second, it's being passed on to the states, with the center not paying up on what they're required to pay up under the agreement which Jaitley had finalized of 14% increase in state-level GST collection. They will not be able to, the real spending for demand growth has to take place at the state level. And if you're going to squeeze the states, then what? Third thing is focus on urban demand growth. Today, a lot of the things that we've been giving out have been money sent into rural areas. Our problem is not rural demand. That's not where the problem is. Our problem is in urban demand. So please try some imaginative ways of fairly quickly generating urban demand, perhaps by special employment schemes and so on. But to do it through just public spending alone is going to be a big, big problem because of what has been happening. On the issue of comparison with other countries, we can do that. I saw Gita Gopinath's numbers came out, and it showed very clearly that India is very much the largest, the biggest drop. And you may not compare yourself with, don't compare yourself with Britain and USA. There's a very different economies. Compare yourself with China. Why is it that China has actually showing an increase in the first quarter against it? I think basically the lockdown was probably harsher than it should have been. It should have left some of the more employment-intensive sectors alone. The risks involved in health terms, I think, were manageable, and particularly because of the relatively low incidence of fatality in India and serious cases in India. So maybe that's the answer. Start relaxing the lockdown in a systematic way and accept the fact that this may lead to a little spurt, and then focus on healthcare to take care of that spurt, rather than just say, keep everybody at home. You can't do that. How long? I mean, it's more than 150 days. We've all been sitting at home. And I don't think we can carry on like this for so long. So don't worry about the international comparison. Focus on what we need to do. We are in for a serious deficit in demand this year. I'd say the government's focus should be on stimulating demand growth, initially in urban employment, which will then stimulate industry, because industry has money. A lot of them are sitting on tons of cash. So if they start seeing demand growth, then I think you'll start seeing investment coming up also. Let me just stop here.
Absolutely. All right. So, Mr. Ranade, let me come across to you now. Let's also analyze the kind of impact the pandemic and the lockdown has had on industry. How badly has the industry been hit? Has irreparable damage been done?
Uh, First of all, no irreparable damage. Absolutely not. And I agree with Mr. Desai. He said, the instinctive reaction has been to cut costs, to conserve cash, to recover receivables. All businesses are trying to do that. There's been a support, as Mr. Abhinav said, on the supply side. So the MSMEs have got some guaranteed loan and so on. So I don't think, irreparable loss in the sense that when you lose 23%, 24% of GDP, that is lost forever. Of course, that is income to people. Remember, 1% growth rate less in GDP annually is 2 lakh crores, 2 lakh crores of income permanently gone. So to that extent, the fact that the GDP growth is lower, that's a permanent loss of income. Yesterday, when restaurants are closed, it's not like those customers, that income is lost. It's not like tomorrow when I go back to the restaurant, I can't fill up for yesterday's lost business. When flights are going empty, airline flights. So let's not go there. But I'm saying I'm actually somewhat optimistic about a V-shaped recovery, but we can talk about it later. But what are the sectors which have been affected, as you asked me? Because of the shutdown, initially there was a complete demand shock and a supply shock. So as Mr. Desai said, urban areas were very, very badly affected. There are large numbers of businesses in urban areas which are all basically daily wages, if not daily wages, very precarious livelihoods, daily livelihoods, whether you're a cab driver or a thelewala selling vegetables or a roadside guy, a barber, all of that was completely shut down. Similarly, factories had to be shut. So in fact, sectors after sectors, metals, chemicals, textiles were shut. Particularly harshly hit was retail sector. The retail sector, by the way, is 60 lakh crores out of the economy. And that consists of both traditional retail and modern retail. Modern retail are shops and malls, and so they depend on footfalls. That was completely shut. In fact, in the month of, I think, April and May, pretty much there was zero footfall. In fact, even now as we speak, in most part of the country, the malls are not yet open. The single shop, standalone shops are opening. So that sector has been very badly hit. That, of course, affected employment and is affected incomes. Incidentally, in cities, as you know, because we saw the migrant crisis, the income crisis transformed into a food crisis. Because a lot of these people, they don't have independent kitchens where they stock up fridges. There are community eating arrangements. People eat out at, community kitchens. Everything was shut. So we had this strange phenomenon of people who were employed as cooks in restaurants, but they had no food to eat because in their, So that was a serious problem. The income crisis becoming a food crisis. So, I don't know if you want to discuss what next. How do we come out of this?
Absolutely, yeah. How do we come out of this? You
So
spoke
I
about
think,
V-shaped recovery. So where is the V-shaped recovery going to come from?
So I think basically it's a demand, it's a demand problem right now, as Mr. Abhinav also said. We need to revive demand. And, if you're not going to do fiscal stabilization or fiscal impetus, fiscal stimulus in a down cycle, when else do you do it? This is the time to actually do very strongly counter-cyclical fiscal policy, ignoring the fiscal hawks, ignoring perhaps the threats from rating agencies. I think there are lots of avenues available. Maybe they will stretch our fiscal deficit to levels which we have not seen before, but we need to focus on demand. For example, the MSME minister himself is on record of having said that the government of India owes 5 lakh crores to the vendors. These are bills, these are invoices not in dispute. Those payments had to be immediately cleared. So that's the kind of example. All pending payments must be cleared. All pending income tax refunds must be done instantly, because every year the government of India gives out 1 to 2 lakh crores of income tax refunds, but they come after 6 or 9 month delay. They have to be done instantly. There is unutilized GST credits. There is GST refunds. I know about retail and telecom sectors, so those have to be returned. If the government doesn't have the cash, then allow corporates to use the GST credits to make future GST payments. Allow people to use income tax refund certificates to make income tax, advance taxes are being collected. Then furlough scheme. See, big challenge is that the workers' salaries have to be paid. People have taken pay cuts, there have been job losses, but existing salaries, if you get some support on paying, this is something that has been tried out in many countries under the name of job keeper scheme or furlough scheme or whatever. I think we know the PAN numbers, we know the PF is cut from employees, whether it's contract employees or formal sector employees. We could easily triangulate this. It's in the earlier days, perhaps the IT systems were not up to mark. We can do this. The government of India doesn't even have to give the money to the corporates. It can directly credit the accounts of workers. So at least for the next three or to 6 months, we should give salary support. And then, of course, there are other like Mr. Desai said, can we now convert the bounty which is coming in terms of the kharif crop into something which can become, so the MSP is a price guarantee, but often the procurement, is not 100%. So actually, de facto incomes that go to the rural areas or the farmers is not what the MSP promises, because the procurement is largely in states like Bihar and some other states. I believe it used to be the case that 80% of the procurement was outside the mandis, outside the government procurement scheme. Can we ensure 100% procurement for all the kharif crops? That will go a long way to putting purchasing power in the hands of the farmers and the rural families. I think those are the kinds of things we need to do. We should focus on demand creation.
Absolutely. All right. So, Abhinav, let me come across to you now. So, focus on demand is what both of you have said. Looking ahead now, what are the sectors that we need to watch out for? What are the sectors that need special attention? And what are the sectors that probably don't need that hand-holding at this moment?
Yes. So, I agree with my previous panelist, Mr. Ranade, that we should stop worrying about the credit rating agencies, because remember, these are the agencies whose predictions, whose calculations have more often been wrong than correct. So they have a wrong history of going wrong, of rating people based on opaque parameters. So we don't know. Companies and countries are rated in such a manner, lots of lobbying also goes on behind the rating. So we should not be worrying about these kind of ratings and the agencies. We should really focus on the sectors which have been affected most by this crisis and which have brought into sharp attention that we need to do more in certain areas. And number one, I will say the healthcare. The government of India should start, I will say, doubling down on the healthcare, because you can immediately increase the demand in the economy by building more healthcare centers, by building more hospitals, by hiring more doctors, by increasing the workforce in the healthcare sector. The states can also do that. That immediately is going to both relieve the demand pressure, and also it will also create supply for the future. The second thing, Frank, can be this whole new area of the green industry and the environment. Now, it has shown us that the pandemic has basically shown us that environment, is very much linked to not just our healthcare, but also to our economy. What happens in the other sectors, other part of your ecosystem has a great impact. So environment can be a big area. We are already doing lots of things. We have the solar industry in India, which is coming up. We can perhaps explore more new kind of sectors in this green field. And the other one, Frank, I'll say urban development. The pandemic and the migration and the labor issue has showed us that our cities are basically unlivable. So perhaps, let's say 5, 6, or 10 year long plan of reconstruction of these our cities and our urban centers can go a long way in creating both employment for the masses, for creating more livable space, and by generating the future, I would say the workplace for the masses, which are more productive, more efficient. Other things can be, we have to really focus on education, Frank, because see, we cannot have well-paying good jobs in this country unless until we have a skilled and educated workforce. And that is something we have not paid attention to. Unfortunately, that has been a failure of the successive governments in this country. We have not taken this entire question of education and skill development seriously. So there have been some initiative in the last few years. Those needs to be scaled up so that you have the workforce which can move up the value chain in the production process. So I'm pretty sure industry also always complains that they do not have the well-trained human resource available in the country. So there are certain sectors where you have lots of jobs in the private sector, but they're not the people who have had right skill sets in those sectors. So we need to bridge that gap, and perhaps NEP, which has come in, provides us with an opportunity to also increase expenditure and in the education sector, Frank.
Right. Okay. Points taken. It's time now to get closing comments from all my panelists with the best way forward. So we've heard Mr. Ranade and Abhinav Prakash's remedy really for the future. Mr. Desai, what's yours?
Yeah, I think if you see, the key to the whole thing lies in the capacity of the government to spend, to really allow the deficit to expand. The constraint on that is there is not just term institutes. From the 90s, we had a system by which the deficit was not automatically monetized. The government had to borrow its deficit from the market. Now, there's a limit to how much the government can borrow in the present environment. So I think one of the things that the government should do is go back a bit on that. Print the money. Let money be printed. It doesn't matter if our deficit gets monetized. We do, because there is a worry right now, about inflation, because it has gone up to 6% or so. But I think now with the Kharif harvest being promising, we may not have such a huge issue on the inflation front. So my point is that basically doing what is being suggested by Ajit and Abhinav will require not just allowing the deficit to grow, but also changing the rules on how the deficit is financed. Because you can't, if you start financing the deficit as we are supposed to do since the 90s by borrowing in the market, that will not be such a bright idea. Because you want to leave scope in the market for the industry also to pick up when the time comes. But right now, try and build on what the promising future in the rural economy because of what is happening to the Kharif harvest. Try and see how you can use that to boost the economy as a whole.
Absolutely. All right, Mr. Ranade.
Yeah, Frank, let me remind everyone that farming is completely in the private sector. There's no government sector. So let me remind that the recovery is going to happen led by the private sector. While we keep asking for government to recruit or to push fiscal stimulus, that is only an enabler. When we are saying fiscal stimulus should be given and fiscal deficit can be higher, I don't mean it that's the complete solution. The large part, the lion's share will be the private sector. So there you need to do something which can build consumer confidence. Consumers are really anxious because loss of jobs, anxiety of losing your job, cutting back on spending. The Diwali this time, I don't know how boisterous and how exuberant spending will be. They are worried because they might lose jobs. Business is worried that they have to cut down. There's not enough demand from consumers, so we cut back on costs, we cut back on production. So business confidence is lacking because consumer confidence is not there. Consumer confidence is not there because business confidence, because they might lose jobs. So this is a kind of a vicious or whatever. This is a self-fulfilling. This needs to be broken. So this is what basically we need to acknowledge that it's going to be private sector led. So whatever it needs, whether it's supply side measures, demand stimulus will go some way, help on salary payments, salary support will go some way. As you said, health and education are soft infrastructure, which is actually primary health and primary education are in fact the government's domain. All these things should be done in a way to eventually unleash that confidence from both consumers and business confidence. That's how the recovery is going to happen. And of course, I'm hoping that the vaccine will suddenly show up in December or January, and that probably will be an added impetus to the confidence.
Okay, a little bit of luck also on our side will help us come out of this, is what you're suggesting. All right, Abhinav Prakash, close the show for us with your quick concluding remarks.
Well, I agree the recovery has to be led by the private sector, but let us remember that the government spending in India crowds in the private investment. It doesn't crowds out the private investment. So more government spending will definitely mean more stimulus and more scope for the private sector to grow. Other point, Frank, is that we have to relax this FRBM Act, whose target of fiscal deficit is really arbitrary. And third point is that uncertainty should go. So this frequent lockdowns by the state governments, by the local authorities, that should go. And also policy uncertainty should go. Nothing should come as a surprise. No policy measure now should come as a surprise, whether it's the lockdown or it's other kind of policy measure. I think that should do it.
Okay, be transparent and open is what Abhinav Prakash is suggesting. On that note, we'll call it a wrap on this edition of The Big Picture. Thank you to all my guests for joining me on the program and putting things into perspective for us. What's coming out of this discussion is that the main problem areas are construction and services. This is where jobs and demand are created, and they have been badly hit as a result of the pandemic. The migrant labor going back and tilling the land has helped the agriculture sector, is what the panelists are suggesting. The green shoots of recovery are going to be from rural demand and from rural areas. This is not a new trend. The economy was going through a rough phase even before the pandemic. The lockdown has only made things worse. urban areas were worst affected, this is what we have to focus on. The rural economy will take care of itself. It's a demand problem. We need to revive demand, clear all legitimate pending bills and income tax refunds, and also employ those who have been waiting in the ranks and those who have completed their examinations so that they too can contribute in economic growth. With that, it's a wrap. See you again next time.